TSMC 2026 First Quarter Earnings Conference Market Focus Summary. This summarizes the key market concerns before the earnings conference, including the impact of recent geopolitical and macroeconomic variables, overall business outlook and first quarter/second quarter performance. TSMC's previous guidance indicates that first quarter 2026 revenue in US dollars is expected to range between $34.6 billion and $35.8 billion, with sequential growth of approximately 4% and significant year-over-year growth. Gross margin is estimated at 63% to 65%, and operating margin at 54% to 56%. This reflects strong demand for advanced processes, especially 3 nanometer and below, breaking the traditional first quarter seasonal slowdown pattern. The market expects the earnings conference to release the actual first quarter financial results and provide second quarter guidance. The focus will be on whether AI and high-performance computing demand can continue the weak season not weak momentum, as well as the supply and demand situation for advanced packaging capacity. The full-year 2026 US dollar revenue guidance of nearly 30% year-over-year growth is closely watched by the market for whether it will be maintained or raised to AI demand momentum and long-term growth trajectory. Artificial intelligence remains the core growth engine. Management has previously emphasized that AI is a structural mega-trend. From 2024 to 2029, AI accelerator revenue is expected to maintain a compound annual growth rate in the mid to high 50% range, while the company's overall revenue CAGR is close to 25%. The proportion of advanced processes in wafer sales has already risen to nearly 80%, and customer order visibility extends to 2027 and beyond. The earnings conference is expected to provide updates on 2 nanometer production progress and yield, which is anticipated to contribute more noticeably in the second half of the year, progress on N3P and A16 technologies, and whether advanced packaging capacity expansion can ease bottlenecks. Although the market occasionally raises AI bubble concerns, demand from most of TSMC's customers remains diversified and long-term in nature, capital expenditure and global layout. The 2026 capital expenditure guidance remains between $52 billion and $56 billion US dollars, with 70% to 80% allocated to advanced processes and packaging, and the remainder to specialty processes and overseas fab expansion. This scale represents a significant increase from 2025, demonstrating confidence in long-term demand, though it also brings higher depreciation pressure. Overseas fab layout helps diversify risks, but initial costs are relatively high. The earnings conference will focus on execution progress and details of capital allocation, external environment risks and response strategies. Recent conflicts in the Middle East have caused Brent crude oil prices to surge, once exceeding $100 to $120 US dollars per barrel, driving up global transportation and logistics costs. Marine insurance premiums and fuel surcharges have risen noticeably, and the supply of some key materials has also been affected. In addition, the relative depreciation of the US dollar impacts exchange rate dynamics and may exert pressure on gross margins. TSMC's expected response measures include accelerating supply chain diversification to reduce dependence on key materials from the Middle East and transportation routes. Costs will be mitigated through moderate adjustments to the average selling price of advanced processes and improvements in operational efficiency. Overseas fab layout not only disperses geopolitical risks but also brings operations closer to customers, helping to reduce long-distance transportation dependence over the long term. In terms of energy efficiency optimization, although AI chips consume more power, TSMC's technological leadership helps lower overall system energy consumption for customers, indirectly buffering energy cost pressures. Management typically emphasizes that these external variables represent short-term manageable challenges and will not affect the long-term growth trajectory. The market will pay attention to the quantified impact and confidence in risk control, gross margin and profitability. First quarter gross margin guidance has reached a high level, mainly driven by product mix optimization and a higher proportion of advanced processes. Even in the face of rising oil prices, transportation costs, and exchange rate fluctuations, TSMC expects full-year gross margin to remain at a high level, with a long-term target of at least 56%. The earnings conference focus will include pricing power for cost pass-through and control over the initial dilution effect from overseas expansion and new processes, other secondary issues. These include competitive landscape and whether technological leadership continues to widen. Power and infrastructure, including electricity support progress at fabs in Taiwan and overseas, and overall macroeconomic and geopolitical risks, which TSMC has already addressed through its multi-location layout. Summary of market sentiment. The current sentiment leans positive, with AI's structural demand serving as the main support. However, geopolitical tensions and cost pressures remain potential variables. After the earnings conference, the management team's transparency regarding external risks and their response strategies will directly influence investor confidence and stock price reaction. April 16 marks the upcoming TSMC 2026 first quarter earnings conference. I will provide you with the latest updates on Taiwanese domestic institutional investors' movements, target price adjustments, and investment recommendations. Please stay tuned.